Let's take a look at what the markets are up to as we speak, and it's taken a sharp turn for the worse. We have now a 200-point cut being witnessed on the Nifty 50. As we speak, we've hit the bottom point of the day, with the Nifty now even threatening to slip below 11,450. The Sensex has lost around 622 points. This is definitely one of the worst days we've witnessed, at least in the last couple of months. A massive drop from the high point of the day. The Nifty Bank, take a look at that. That slipped more than 1,500 points, close to 2,000 points of a decline being witnessed. Definitely one of the underperformers. It's red all across. We have, even the realty space losing 3%, cap goods space, auto, power, all of them losing more than 2.5%. So what started off as a day where we saw the Nifty even, or rather the Sensex even briefly making that kiss and go moment with the 40,000 mark, has eventually led to one of the worst falls that we've witnessed in a long time on the Lal Street, with a more than 1.5% decline being witnessed. Well, let's take you through then what are the big movers and shakers today in trade. First up, got a flag of the future group of stocks, because this is one pack that's managing to hold on locked in the upper circuit despite whatever losses that we are witnessing. So it's a 20% fall in future a rise in future retail, and 5% gains for future lifestyle and future consumer. This is of course on the back of that much awaited Reliance deal. Reliance Industries will be picking up the entire retail, the logistics, the warehousing business of the future group. So that's definitely a big mover today in trade. But interestingly, the next buzzer that I want to flag off is also a Bank of India. The reason being that we are seeing this stock as well see massive momentum, and the reason is that Bank of India was the one company or the one bank that had the most exposure to the future group stock. So we are seeing massive momentum over there as well. 4% of gains for Bank of India. But that's all when it comes to the gainers. The next set of stocks that I'm going to flag off are mostly losers. And the first one has got to be IndusInd Bank. Remember last week we were talking about how this one has been a great outperformer. We had seen almost a 10% rally. The stock price as well had managed to reclaim 600 rupees. And yes, it's still, above that 600 rupee mark, but it is losing 4% in trade. So that gaining momentum that we saw for the most part of last week, where we saw the stock move from 520 to 600, has now sort of snapped, and we are sitting on 4.3% of losses. And remember, like I said, the banking index today is among the top losers. The other big loser is also then IndusInd Bank, and massive losses being witnessed over here, 9%. Now remember, this may also be a bout of sort of profit booking coming in, because remember last week we had the news with respect to the Nagarnar steel plant divestment, and when that news broke, the stock spiked from 95 to about a close of 108 rupees on Friday's trading session. So it was almost a 10% rally that we saw on the stock price of NMDC. Now we are seeing some reversal in that trend, and we are back at that level of 97 odd rupees. So a 9.8% decline coming in on NMDC's counter. And finally, I also want to flag off an Adani Enterprises, that much awaited news with respect to the Mumbai International Airport, very coveted one at that, has now finally seen the light of the day, wherein Adani Enterprises has acquired that stake. In fact, it's now perhaps going to go head to head with GMR. But interesting here is zoom in the earlier part of the trading session to a level of close to 300 rupees, but now it's in the red, and it's just at about 281 rupees. In fact, let's take in a bit more details on the Adani Group and more specifically Adani Enterprises. Like I mentioned, they finally announced the takeover of the Mumbai International Airport, and it will be responsible in developing the upcoming Navi Mumbai Airport as well. In a statement to exchanges, Adani announced infusion of funds, buying of the debt as well of GVK Airport. Utkarsh Chaturvedi joins us with more details. Utkarsh, how does the deal work out?
So, well, part announcements of Adani's taking over Mumbai International Airport Limited has come, or what is out in the open is one, that Adani's will be taking over the debt of GVK, the debt including the guarantee which GVK Power had given for the debt. They will be speaking to the lenders for that. How much stake will they be buying? At what cost will they be buying? That is something which is not yet being told. Then they have said they will be buying stake from Bidvest and AXA, which is around 23.5% stake. That is in Mial, that they will be completing. And then they said that in the Navi Mumbai airport as well, given the fact that Mial has a stake and GVK had a consortium with other players, they have terminated that consortium. So obviously Adanis will show their interest in an MIAL as well. In fact, in the release, they had said that they have infused money into the system, given the fact that GVK and Mial can come in through a Navi airport. Something which we had told last week to our viewers, that Citco had asked financial proof and GVK had asked time. This was maybe the reason that GVK was asking for time. What we have to now wait and watch is at what price. What is the total infusion of money here when giving, if they're paying money to lenders, acquiring stakes from Bidvest and AXA. Now, what I've been told is that Bidvest stake of around 13% was supposed to be bought at 1300 crore rupees last year, but the prices have gone down. So that bid price, that acquisition price has gone down is what I've been told. And then we have to see that how much stake of, because the release says that they want to have acquiring stake in MIAL. If you look at the current structure, 23.5% if they have bought from Bidvest and AXA, they only want around 24-25%, 26% around from GVK to their controlling stake. So will GVK be selling complete 51% stake to Adani or not is something which we'll have to see. There's a lot of detail which needs to come, but the formal announcement that Adanis will be taking over MIAL in due course of time has already been out and being told by Adani in a statement to the stock exchanges.
All right. Thank you, Utkarsh, for taking us through those details. Remember, it was quite an awaited, deal. Well, moving on, states have rejected the centre's options on the GST compensation shortfall. Remember, we had the GST Council meeting on this topic that took place, I think, on Thursday last week. Let's go across to Ruchi Bhatia for more.
The fight is not over. In fact, it has just begun. States like West Bengal, Kerala as well as Punjab have rejected the two options that have been given to them by the centre to make up for the GST compensation shortfall. In fact, the West Bengal Finance Minister calling it an act of fraud, while the Punjab Finance Minister saying that both options are unattractive. In fact, the Kerala Finance Minister told ET Now that all the opposition states will now be meeting on Monday to decide a way forward. We're given to understand that states had completely rejected these two options based on the fact that this will only increase their own debt servicing liability, and the centre is reneging on their promise. Remember, the centre 2 days ago had written to the states, assured them that the finance secretary as well as the expenditure secretary will be addressing all the issues and concerns of various states. In fact, as a part of option 1, they had said a special window will be made available by the central bank, by the RBI, to make up for the GST compensation shortfall on account of the implementation of GST of about 97,000 crore rupees. However, the second option is where the problem is, which is even though states go in for the second option, almost 2.35 lakh crore rupees they will be getting, which is a shortfall on account of implementation of GST as well as COVID-19. However, one cannot ignore the fact that states themselves will have to bear the interest burden. If they choose the first option, that means lesser money that they'll get. If they choose the second option, which means states will themselves have to pay for the interest burden. In both the options, states are not okay with what is coming their way, and which is why the battle is only going to be longer.
All right, Ruchi, thank you for that. For now, of course, the entire GST compensation topic will be continued going forward as well. States have rejected all of the centre's options. So yes, this lockup of sorts will continue. Well, the 6-month loan moratorium holiday ends today. The moratorium, which was meant to provide temporary relief to COVID-hurt businesses and individuals, has of course sparked NPA fears, concerns over the health of the financial system as well. And remember, we did have the RBI saying that, look, Moratorium's over, but you do get a restructuring option, but that one was restricted largely only to MSMEs and retail loans. But let's go across to Varun Hiremat, who joins us with the numbers. Varun, how did things move on the asset quality front during the moratorium, and are we expecting the asset quality to deteriorate now that, you know, this loan repayment holiday has ended?
Well, your guess is as good as anyone's, Mubina. What's happened basically, as you're well aware now, over the last couple months where there's been moratorium, we've had no real asset quality update because there's been no recognition, so there's been no slippages. So everything's kind of just been locked up and kept away from us. Now that's going to be lifted. What we do have is the moratorium figures. And I mean, for every bank, we know kind of where it stands, right? For the large private ones, HDFC, Kotak, Axis, it's currently at 9%. HDFC never started high off. They started at around 10, 11. Kotak started at 26, which has come down to 9. Axis also was fairly high, I think around 28, and then they came down to 9. So those guys are doing well. SBI also was low, less than 15 to start with, and currently stands at 9 or 10. ICICI Bank is the only laggard from the private banks. They're still at 17%, but they've also come down from 30. Then you have guys like RBL and DCB, which are a little smaller, which have come from 33 to 14, 60 to 26. You have a Bandhan, which has come from 71 to 30. So, you know, everyone's made progress during the moratorium, and the number has been consistently dropping. I just find it funny that the bank Nifty is also under pressure today, but it's unfair to say it's because of this, because everything's down right now. The auto index is down more than the bank index. So this is an independent move, what we're seeing on the market. But yes, for banks now in Q2, Q3, as Shyam Srinivas also said this morning from Federal Bank, we're going to figure out what the real picture is at each bank. And then we'll see how the current valuations hold up and how, you know, we'll understand now only once the Q2 and Q3 numbers come out.